Have you ever felt that incredible rush from a winning trade? Well, today we're going to talk about why that feeling might just be the most dangerous drug on the market. We are peeling back the comforting layers to get to the cruel truth of trading. Let's start with a scene I bet you know really well. You're watching the numbers on the screen, they're going up, your account balance is swelling, and you've already started spending the money in your head, right? You're thinking about a new car, a vacation. You feel like you've cracked the code. You feel like a genius. But here's the cold, hard wake-up call. The truth, and this is something that's so often hidden behind those pretty green numbers, is that until you have physically clicked sell and that money is sitting in your bank account, it is not yours. It's just an illusion, a really clever piece of bait the market is dangling to keep you in the game.
Okay, so first things first, we have to understand the arena that you've just walked into. Because in the game of short-term trading, there's no such thing as a win-win.
Let's get one thing perfectly straight. In the short term, the market is a zero-sum game. Actually, you know what? Once you factor in fees and taxes, it's a negative-sum game. And what that means is, for every single dollar you make, somebody, somewhere else, has to lose one. There are no exceptions to this rule.
So this forces you to ask the single most important question before you make any trade. Who is on the other side of this? Who is your counterparty? Who is it that's selling you this stock at the exact moment you've decided it's a brilliant thing to buy? And don't kid yourself, you are not playing against a bunch of amateurs. Your counterparty could easily be a company insider who knows something you don't. Or it could be a massive institution running algorithms that are faster than you can even think. Or maybe it's a seasoned professional who's decided this thing has hit its peak and they are more than happy to hand that risk over to you.
You know, there's this classic saying in poker that just fits perfectly here. If you sit down at the table and you can't spot the sucker, the fish, within the first 30 minutes, then you are the fish. It's that simple. If you can't figure out who has less information in the trade, I promise you, it's you.
So if the market is a battlefield, then one of its most potent weapons is definitely psychological. Let's talk about this incredibly dangerous trap of on-paper gains, or what's sometimes called floating profit. It's so important that we completely redefine this concept. Floating profit is not wealth. The truth hiding behind the numbers is that it's just the market's payment to you for shouldering an enormous risk, the risk that everything you think you've gained could completely disappear in an instant.
And this illusion, this phantom profit, is one of the market's best tricks. It literally acts like a drug, giving you this powerful, hallucinogenic feeling of being wealthy that completely warps your judgment and tricks you into feeling safe.
And this is where the cycle of ruin really kicks in. So imagine your $100,000 account doubles to $200,000. What happens? Your brain immediately resets. $200K is the new floor. So now you start taking risks that are appropriate for a $200,000 portfolio, telling yourself, hey, it's okay, I'm just playing with the house's money. And that right there is exactly how traders not only lose all their profits, but their original money too.
We're just about to get into the final traps that the market lays for you. If you're finding these insights valuable, please take a quick second to like, share, and subscribe so you won't miss what's coming next.
But hey, even if you manage to conquer your own psychology, the market has another nasty surprise waiting for you. This one is purely logistical. It's the exit door.
There's this great old saying on Wall Street. Amateurs study how to buy, but professionals, they study how to sell. So many investors work under this dangerously naive assumption that they can just sell at whatever price is on their screen whenever they feel like it. But in a panic, you discover this terrifying thing called liquidity exhaustion. You see that price on your screen? That's not the real price. It's just history. It's the price of the last trade that happened. In a real crisis, when everybody is sprinting for the exact same exit, there might not be any buyers left at all. And that's when you learn, the hard way, that the price and the ability to actually sell are two very different things. So here's the crucial point. It doesn't matter how much gold seems to be sitting in a room if there's no way to get out. The true masters of trading aren't staring at the potential reward. The moment they walk into the room, they're looking for the emergency exit. All right, on to our final and maybe the most uncomfortable truth of all. And this one isn't about the market. This one's about you.
There is a cruel, unavoidable law of averages in trading, and it basically goes like this. Any money you make purely by luck, you will eventually give back to the market through what you mistakenly believe is skill.
Honestly, one of the worst things that can happen to you is getting a massive win early on from a trade you didn't really understand. Why? Because it completely breaks your brain's reward system. It teaches you that pure gambling works and that doing your homework is for suckers. And that creates a dangerous addiction to luck. An addiction that the market will eventually punish you for, severely.
So after all of these harsh truths, what's the big takeaway here? Well, it means we have to completely reframe what our objective even is.
To have any chance of succeeding, you have to see trading for what it is. It's like a dance, but you're wearing chains. And those chains are your own human nature, your greed, and your fear. The only way to navigate this is to stay incredibly clear-headed, to respect the market, respect your opponents, and most of all, respect yourself. So this means you need to adopt a totally new set of rules, a survivor's code. Start focusing on your opponent, not just the pretty chart. Treat floating profit like it's just air, because it is. Protecting your capital is priority number 1, 2, and 3. And always, always keep one foot near the exit, just in case that door slams shut.
Because at the end of the day, in this brutal jungle, the goal isn't to win big once. The goal is just to survive, staying in the game long enough to trade another day. That is the only victory that truly matters. Remember that.